Hello and welcome back to Seminar 6 of AC 2401 Accounting Information Systems at Nanyang Business School of Nanyang Technological University in Singapore. This is the third part of the revenue cycle. Next, we move to SD transaction data. This figure shows you the cycle of activities and documents in the SD module. The pre-sales activities start with a quotation, the generation of a sales order, checking of available stock, to picking, packing materials, the posting of goods issuance, to the billing of the customer, and ultimately the collection of cash from the sale. Let's consider pre-sales activity now. Pre-sales activity typically is a request for a price quote. This inquiry is maintained in the system to address questions or queries the customer may have. The quotation is a legally binding offer to the customer. This figure displays the various data that are contained in a typical quotation. Next, the sales order. The trigger for the sales order can be a purchase order from a customer, an existing contract with the customer, or a quotation. The sales order contains information like details of the customer, material quantity and price, and shipping and billing information. This figure displays the data contained in a typical sales order. This is the general structure of a sales order. The outcome of a sales order includes a credit limit check, delivery schedule, availability check, pricing, and shipping point and route. Delivery scheduling ensures that the material or stocks of inventory are available for delivery to the customer. A stock availability check ensures sufficient stock for delivery to the customer. This is an illustrative stock and flow diagram for inventory management purposes. The credit limit check is an important control to ensure that sales do not result in non-collections or bad debts. This check is typically activated during the sales order process so that orders and deliveries are not made to customers who are not creditworthy. SAP displays pricing information for all sales documents and automatically searches for price, discounts, taxes, and freight. The system also determines the optimal shipping point and routing for the delivery. Next, shipping. Changes in delivery will update the sales order, and the delivery document kicks off the delivery process. This figure displays the various data contained in a delivery document. This is the structure of a delivery document. The system carries out the following activities when an outbound delivery is created. It checks the order and materials to make sure that the outbound delivery is possible. It determines the delivery quantity of an item and checks its availability. It calculates the weight and volume of the delivery, calculates the work expenditure, packs the outbound delivery according to the reference order, checks the delivery situation and any partial delivery agreement, redetermines the route, adds information relevant for export, checks delivery scheduling and changes deadlines as necessary, assigns a picking location, and updates sales order data and change order status. In the system standard settings, it is a prerequisite for goods issue to be posted before the item relevant for picking can be picked completely. Therefore, delivery quantity and picking quantity in the outbound delivery must be equal. The picking process involves taking goods from a storage location and staging the right quantity in a picking area where the goods will be prepared for shipping. The packing component and related packing information enables one to update the stock situation of packing materials, monitor returnable packaging stocks at the customer's or forwarding agent's place of business, and helps you to find out what was in a particular container. As soon as the goods leave the company, the shipping business activity is complete. The outbound delivery forms the basis for goods issuance posting. The data required for goods issue posting is copied from the outbound delivery into the goods issue document, which cannot be changed manually. Any changes must be made in the outbound delivery itself. In this way, one can be sure that the goods issue document is an accurate reflection of the outbound delivery. When you post goods issue for an outbound delivery, the following functions are carried out on the basis of the goods issue document. Warehouse stock of the material is reduced by the delivery quantity. Value changes are posted to the balance sheet account in inventory accounting. Requirements are reduced by the delivery quantity. Serial number status is updated, and stock determination is executed for the vendor's consignment stock, amongst others. Next, billing. The billing document automatically creates a debit posting to the AR subledger account and credits the sales account. It is at this point that the sales process is passed over to the financial accounting team to collect payment. These are the data contained in a billing document. This is the structure of a typical billing document. The outcomes of billing include the posting of an entry to sales and accounts receivable, creation of documents like the FI, CO and invoice documents, and updates to the sales documents and the sales information system. These T accounts show the various entries being made as a consequence of a sales order processing. The impact of shipping or issuance of goods is denoted by the number 1, and billing is denoted by number 2. You may pause the video to study these entries to the T accounts in further detail. Next, reporting options in SD. SAP ERP provides several reporting options, including online lists, work lists, and analytics. An additional reporting option in fulfillment is the document flow, which identifies all the documents relating to a customer order. These are some examples of standard analysis in SIS or Sales Information System. This is a screenshot of a document flow in a waterfall format. We have come to the end of the seminar. Now, you should proceed with the lab session for part 1 of the revenue cycle on the SAP ERP system. Thank you.